Italian confectionery giant Ferrero says it will stop sourcing palm oil from Sime Darby Plantation after the US found that the Malaysian company used forced labour in what Reuters reports as a reputational blow to the palm producer and Malaysia. Ferrero told Reuters by email that on April 6, it requested all its direct suppliers to stop supplying Ferrero with palm oil and palm kernel oil sourced indirectly from Sime Darby until further notice. It adds that Ferrero will comply with the US Customs and Border Protection's decision. Although Ferrero buys relatively little of the edible oil from Sime Darby, its move following similar halts by Cargill, Hershey and General Mills could hurt the Malaysian planter's standing as a leader in sustainably produced palm oil. Sime Darby told Reuters it had taken steps in the area of human rights and that all its stakeholders who are committed to sustainability can be assured of its commitment and leadership in the industry. It adds that Ferrero is not a customer. Following a 2020 decision to ban imports due to the presence of forced labour indicators at Sime Darby, the CBP said in Jan that it had sufficient evidence of forced labour and that the firm's goods were subject to seizure. Sime Darby has promised sweeping changes to its governance and some labour practices following the US finding. Ferrero says it uses only certified sustainable palm oil. It sources 85% of its palm oil from Malaysia, which traditionally has a better reputation for sustainability than Indonesia. Commodities trading giant Cargill said in March it had suspended purchases from Sime Darby pending more information of the firm's measures to address the labour allegations. Last year, General Mills had issued global no-buy orders on Sime Darby, while Hershey had asked suppliers to ensure no Sime Darby oil enters its global operations. Khazanah Nasional has completed a placement of 105 million shares representing 1% in CIMB Group holdings at RM5.10, which raised 535.5 million in gross proceeds. The placement, which trimmed its stake in the banking group to 24.7%, represents a 3.4% discount to CIMB's closing market price of RM5.28 on April 13th. This confirms a report by theedgemarkets.com that Khazanah was placing out more shares in CIMB through an accelerated placement, with the book building opening on Wednesday and closing the same night. In a statement, Khazanah said that the latest share placement is part of its ongoing efforts to rebalance its portfolio and recycle its investments into new assets in Malaysia and globally, including new investments under Dana Impact. The shares were placed out to government-linked funds, both domestic and global long-only accounts, as well as multi-strategy funds, and that CIMB and Credit Suisse were the joint bookrunners for the exercise. Prior to this, Khazanah similarly placed out 138.4 million CIMB shares last September via an accelerated book building, which raised 664.5 million ringgit for the Sovereign Wealth Fund. CIMB today closed 0.97% lower at RM5.09, giving it a market capitalization of close to 54 billion ringgit. The Malaysian Institute of Corporate Governance says that Malaysian authorities should clarify the rationale behind the decision they took to compound the charges faced by Serba Dynamic Holdings and its top executives instead of proceeding with criminal prosecution. MICG Chairman David W. Berry says the case has also attracted wide attention from an international audience of investors and observers, as the egregious lapses in corporate governance were clear from the charges raised. As such, Berry says this decision may not be easily understood by the audience. On Thursday, Berry told theedgemarkets.com that it was good that the issues surrounding Serba Dynamic were beginning to find some resolution. To recap, the Securities Commission on Wednesday compounded Serba Dynamic, its CEO cum Group MD Datuk Dr. Muhammad Abdul Karim Abdullah, and 3 other top executives for a sum of 3 million ringgit each. The compound settled the criminal charges they faced for submitting a false statement involving a revenue of 6.01 billion ringgit for FY20 to Bursa Malaysia Securities. Singapore-listed QAF said its 50% owned indirect associate Gardenia Bakeries KL, which reported a new sales high of 1.08 billion ringgit in 2021, expects to mitigate the impact of COVID-19 pandemic-driven inflation through a 79 million ringgit investment in a new state-of-the-art roll and bun combination production line. GBKL is also contending with the impact of the December 2021 floods, as one of its factories was affected and had to be substantially shut down down, according to QAF's latest annual report. QAF jointly owns GBKL with Padi Beras Nasional. According to QAF, GBKL's new combination production line, which was installed in the third quarter of 2021, has been operational since September 2021. Looking ahead, QAF says the new production line will contribute significantly to GBKL's income in 2022, as it will inject additional capacity of 23,000 pieces of products an hour, giving GBKL the resources to tap further into the important bun and rolls market that is worth about 630 million a year. GBKL will also focus on driving down costs through dismantling policies that do not add value alongside other cost-cutting measures. However, GBKL will continue to invest in product innovation and research and development of novel products that may open new market segments to drive revenue and income growth in the near future. The Ministry of Transport has asked the Malaysian Aviation Commission and airline companies to immediately investigate the increase in airfares during the festive season, Bernama reports. Transport Minister Datuk Sri Dr. Wee Ka Siong says he conveyed the matter during a special meeting chaired by him on Thursday, which also involved MAVCOM, the Civil Aviation Authority of Malaysia and domestic airlines. He says the meeting was held to find solutions following public complaints about the increase in flight fares between Peninsular Malaysia and Sabah as well as Sarawak in conjunction with the upcoming Aidilfitri celebration. Wee says the CAAM had approved the extension of operating hours of air traffic control services at the required airports and assisted the airlines in planning for additional capacity, especially with the approaching festive season. He says the MOT is committed and will make every effort to reduce airfares to ease the people's burden, and that through MAVCOM will inform the public of the outcome of discussions with the airline companies soon. According to Wee, based on MAVCOM's monitoring, airfares on April 30th, 2022 have increased compared with the average airfares in 2019. He explains this increase is due to higher operating costs, especially for jet fuel, as well as limited resources for airlines to increase their full capacity. Wee says the airlines also had a problem in increasing their flight capacity immediately due to the pandemic, adding that the aircraft need to go through the process of maintenance, repair and an overhaul before being approved for safe service. He says that for April 2022, the frequency of flights to Sabah and Sarawak is still low at 68% compared with 2019.